Today I want to go over how to do long-term investment research on TradeWave. In this case, we'll try to see what is the difference of buy and hold of Apple versus Microsoft versus Walmart. Let's go to TradeWave, click on the wave viewer. All those are Dow 30, so I'm just going to select Dow 30. Then I'm going to type Apple, AAPL, enter. And on this right side, I'm going to go down and select on buy and hold. When you select buy and hold, it changes the date range from January 1st to January 1st. And that's actually keeping the security the entire time. So you can take a look at what each of the last 10 years did. Let's see. I am in the middle tab. The middle tab is the stats table right there. So you can see that in the last 10 years, if you bought Apple and held it for 10 years, you would have made 971%. Versus if you did the same thing with S&P 500, you would have made 158%. How about Microsoft? Just going to type MSFT. Everything else kept the same. You can see that Microsoft in the last 10 years did a little bit better than Apple by having over 1,000% cumulative return in just 10 years. It was just a really good stock, both of them, in the last 10 years. How about Walmart? Walmart made 149% cumulative return. Actually, it's below the S&P 500, so it underperformed S&P 500 for the last 10 years, right there. Although did really well this year, up 60%. Wow. Another stock that I'm really fond of is United Healthcare. It's one of the greatest stocks. For the last 10 years, it returned 742%. And this is just pure stock price. We're not talking about dividends at all. This is just the price of the stocks. So this is one of the all-time great stocks. How about last 20 years? If we go and just select 20 years here, look at that. United Healthcare did really well except in 2008, which many stocks did, but it lost 51% of its value. 2006, it lost 14%. Every other year, besides those two, last 20 years, it was positive. It made a 2,159% cumulative return versus S&P 500, 327%. But how about if we type Microsoft? Microsoft was very close at 2,059% for the last 20 years versus Apple, 57,000% versus S&P 500 being only 327%. Apple was tremendously spectacular, but why was Apple so much more? Look at this. In 2004, Apple stock went up 200%. 2005, it went up 136. 2007, 132%. 135 for 2009. These are crazy good. 2019, 93%. 2023, just last year, went up almost 50%. This stock is just unbelievable compared to pretty much everything else that I look at. Now let's take a look at some of the underperforming stocks. How about Coke? Last 20 years. Coke made 331% underperforming S&P 500 for last 20 years. How about 3M? Also underperformed, 134% versus 327%. Caterpillar made 1,000% on the value of the stock in the last 20 years. So it outperformed S&P 500 quite well. How about some tech stocks? Intel underperformed S&P 500 quite a bit. Boeing actually outperformed S&P 500 surprisingly because of these big jumps in the year 2013 and 2017. How about just last 10 years? Last 10 years, Boeing underperformed S&P 500 because of its drops here. And we all know why. But American Express. American Express slightly underperformed S&P 500. How about IBM? IBM really underperformed S&P 500 in the last 10 years. 38% versus 158%, although in 2024 it really came back. Like last 4 years it's done quite well, and it's still only a 38% cumulative return on its stock price. Some healthcare, J&J, underperforming last 10 years, S&P 500. Merck slightly outperformed S&P 500. And let's look at Salesforce. Salesforce slightly outperformed S&P 500, actually more like a little over double the S&P 500, so it was a better investment. And the last one, let's do JP Morgan and McDonald's. JP Morgan outperformed. McDonald's outperformed almost twice the cumulative return in the last 10 years of S&P 500. Anyways, this is how we take a look at long-term investment. How did they do if you held them? How do they compare? You can also compare any particular periods in here and take a look. In some cases, it might be best to hold a stock 11 months a year instead of 12 months. And that's another video going into detail of it. We already have one earlier video about Apple, that if you eliminate the month of September, basically holding Apple 11 months a year in a Roth IRA, for example, you would have dramatically outperformed buy and hold of Apple. And mostly we do that research here by taking a look at the trend chart and try to find the times that the stock has been underperforming. Anyway, there's a video on it. There will be more videos on that later, but right now this is how we take a look at buy and hold and compare different securities and stock with each other to see how it performed historically versus another security. If you like this, you should sign up for a free account on TradeWave.